Apple reporting stronger than expected results, but revenue fell for the fourth straight quarter on soft sales in China. The iPhone maker also signaled some caution for the holiday quarter. And joining us right now is Toni Sacconaghi. He's Bernstein's senior analyst. Toni, I've already heard a lot of people today say that this could be a case of Apple being cautious in their guidance that they're giving. But even so, it's a pretty big difference between what the street was expecting and what Apple is now guiding.
Good morning, Becky. Yes, Apple for the December quarter guided about $6 billion below what the street was expecting. And I think more importantly, if we sort of think about the year and how it typically seasonally evolves from that fourth quarter, it does point, at least through our analysis, to revenues that are about flattish. The street was at about 6% growth for the full year 24. So that is a significant difference. On the positive side, Apple's doing a great job with gross margins. And so while revenue is lower, earnings power, at least, relative to our expectations, is not that different for 24.
For the year, it's still up by 25%, but it has struggled in the recent months. What do you do with this stock right now?
We're neutral on the stock. And I think the question for investors is, what do you pay for Apple? When we look at the alternatives in terms of large cap tech, Apple's trading at about 27 times 24 earnings. Microsoft's trading about 30 times. Amazon's about 32 times. And Google and Facebook are less than 20 times. Most investors believe, certainly on the top line, that all of those other FANG stocks will grow faster than Apple. And yet two of them are notably less expensive and two of them are only modestly more expensive. And I think that's the challenge for investors is Apple's a great company and a great core franchise. But what do you pay, particularly at this point where Apple, declined in revenues last year and we think probably won't grow much in revenues in 24? What do you pay for that relative to other large cap tech choices?
So you're neutral on this name. What stocks do you like better in the tech arena?
Within our coverage universe, we prefer Dell, which we think is very inexpensive and has tailwinds from a recovery in the PC market and potentially a beneficiary from AI. I think as a firm, our top tech picks are Microsoft and Amazon among those FANG names.
The concerns with China, how big of an overhang is that when it comes to Apple, not just from its own perspective, but then with the partner that it's chosen there, Foxconn, having its founder now saying he may run for president in Taiwan?
Right. Well, I think as far as the results are concerned, many people are pinning the disappointment to China. But China actually grew at about 3% at constant currency for Apple in the quarter. So it wasn't really a unique drag on the quarter. It actually grew slightly faster than the company overall at constant currency. So China, at least right now, is not sort of a unique issue for Apple. That said, China accounts for 80% plus of Apple's supply chain and 90% plus of its manufacturing. And so there's always been intrinsic risk as an Apple shareholder from escalation of trade tensions or political tensions with China. And I think Apple's ability to migrate its supply chain is pretty limited. I think it would be very difficult for them to move more than 20 or 25% of their supply chain over the next 3 to 5 years. So they are tied to China from a manufacturing and supply chain perspective going forward. And that's an intrinsic risk to the company.